Welcome to the Guelph Real Estate Report podcast with your host and Guelph Realtor, Ryan Waller. This podcast is designed to provide information for those buying and selling homes in the Guelph area to make the process more informative, fun, and a little less stressful. Now, on with the show.
Hey everyone, and welcome back to episode number 35 of the Guelph Real Estate Report podcast. Today we're going to take a look at the Q1 2026 sales. That's the period of January 1st to March 31st in the Guelph real estate market. But first, my name is Ryan Waller, and I work in Guelph Real Estate with my wife, Beth. Together, we are one of the top volume teams here in the city of Guelph and within Keller Williams Canada, and our goal is to help our clients, whether that's new clients or existing, have more information on the Guelph real estate market so that everyone can make more informed decisions. I just want to say thank you. The last episode we did, number 34, was by far our highest download episode, and I really appreciate you listening, whether you're in the car, at home, sending it to friends. Whatever you're doing, I appreciate it because this is just something that I enjoy doing, and it's nice that other people see value in it as well. This is the audio version of the Guelph Real Estate Update. There is a version on our blog at bethandryan.ca, and I also record a video version of this as well, so there's no excuses. You have written, video, and audio. So thanks again for tuning in. Okay, so it seems crazy, but the first quarter of 2026 is behind us. It seems like just yesterday was January, but I am much happier with the weather of April than I am in January, so I'll take it. Looking back on the first quarter of this year, it was completely unexpected. The winter months are usually slower, but not to the level that we've seen. So we're going to get into the March numbers today, but also give you a summary of how the first quarter rolled up. Just for a bit of background, January was a very slow month. February was a very slow month. And so we anticipated that March would be a bit of a turnaround. And in some ways it was, as seasonality gets better, improves. People start coming back to the market when the snow starts melting and the weather gets a little bit warmer. So naturally in March, we see a rise in volume. And that happened again this year. However, it was also the slowest March that we have seen in years. And on our blog version of this, I have posted a graphic, a chart that shows this March and how it performed versus prior March months. And in March of this year, we averaged out about 3.8 sales per day. And for context, over the past 6 years prior to this year, the volume per day ranged between 4.5 and 11.6. So to finish March this year at 3.8, it was a slow month. And slow month doesn't necessarily mean declining prices. It doesn't mean it's not negative across the board. There are people that certainly appreciate a slower volume month, and those people in this case would be buyers who have increasing amounts of selection in some cases, and the opportunity to shop around, take your time, add conditions, negotiate the price. And so even when volume is down, there is still someone out there, a whole segment, the buyer segment, that appreciates the way the market is going. If you're selling a house, you probably don't appreciate it as much right now, but houses are still moving, and there is no crash in prices. It seems to be pretty stable, but there are interesting things happening. So let's get into it. Starting at the top, the average price of a house in Guelph in March, if you add all of the residential sales together, the average price was $770,000. And that's made up of two segments. The detached segment that averaged $888,000 and the condo segment, which averaged $536,000. Add the 888 and 536, average it out, you get a total of $770 in the Guelph real estate market for March. That is slightly up from February, and I anticipate as we get into April and May, it's going to rise. Typically, you probably will see the highest average price in May, and that's not because housing prices are going up that much. It simply means that there's the largest mix of houses that sell in May, and usually those are some pretty expensive houses. So I anticipate the average price will tick up a little bit over the next few weeks. In March 2026, we had 119 sales versus 138 at the same period last year. And of those 119, 79 were in the detached segment and 40 were in the condo townhouse segment. Specifically looking at the detached segment, we had a total of 79, as mentioned. 492,000 was the low price, that was downtown. 1,750,000 was the high price in Old University, and in Old University, we've seen a number of houses now sell at 1.4 and above. So there is always demand in that neighborhood, but there are also some very expensive houses in that neighborhood which seem to be always desirable. As mentioned, the overall average here was 888,000, and it is inching closer to that 900,000 mark that we saw in, I think it was June or July of last year. Total homes here sold at an average of just under 98% of the last listed asking price. Nothing notable here. We've been in this trend for quite some time, but it does mean there's a tiny bit of negotiation power going on behalf of buyers. 9 of the 79 sold over the asking, 11 sold at the asking, and the remaining 75%, or 59 out of the 79, sold under the asking price. And if you are a buyer in the detached segment, specifically if you're a buyer north of Stone Road, you may have noticed that there is a shortage of houses, specifically within the 700 to a million mark north of Stone Road. There just hasn't been the inventory that buyers are expecting. And we have a few clients that are simply waiting on something to come to the market that they are interested in, that suits their needs. And so if you have anything in around the downtown right now that you're considering listing, you should call us because we certainly have buyers. It is an interesting segment for sure. The overall inventory in detached has declined over the past few weeks. Some of this is because listings have expired, but I would expect that they will come back over the next few weeks. But overall, over the past 15 days, we've had a net decrease in inventory coming into spring. Now, it doesn't mean that buyers are willing to throw money at houses. I'll give you an example. I won't give you the specific address, but it was a house in Old University that hit the market on I think it was on a Thursday or Friday. By the end of the weekend, they ended up with 5 offers on this house. There was no strategy to what they call hold offers, but it just turned out that there were 5 parties simultaneously interested in this house. All knew they were competing against each other, and the price of this house was $1,099,000, and the offer that was accepted, presumably the best offer to the seller, was a conditional offer, and in the end, now there's a finalized sale, sold for about $25,000 over the asking price. Now, if this was 5 years ago, the best offer would have been no conditions and $50,000 over the asking price, and it just goes to show that even the best offer in today's market is conditional and is barely above the asking price. And some would say, yes, $25,000 is a lot of money. But when you're competing, when you have 5 offers and you're competing, some people tend to offer a lot more. It just goes to show that buyers are conservative in today's market. Part of what propped the average price up in the detached segment was the number of $1 million plus homes that sold in March. We do keep track of this to get an idea of if the market of the higher end segment is going up or down. And generally in the past, we've seen 15 to 20% of sales fall in the $1 million plus sale price range. And we were there in March. It was 17%. Or 20 houses sold over the $1 million range. So we are back in the range after a couple of months of being under. And I would say that there are definitely buyers for this segment, but they are also playing it conservative. They have tools at their disposal that they use to track sales. I mean, data is becoming more and more available. So buyers know when there is a house price too high, and they know when there is a house price too low. And you may say, well, Ryan, how do you know that? If it's priced too high, you won't get showings. Buyers say, nope, at that price, I have better options. I'm not even going to make an appointment. If it's priced too low, like that example of the house I just gave you in Old University, buyers flock in and they are willing to compete to bring it up to what they perceive market value to be. And in the end, of course, the market decides what market value is. And in that case, it was 5 offers and $25,000 over the listing price. So if you have a house over $1 million, yes, you will get traffic. Yes, they are moving, but do yourself a favor and don't overprice it. Overpricing it, you're not even going to get showings. Pricing it at market value or maybe slightly below, you will definitely get showings, and you need showings in order to get offers. And if buyers perceive it to be underpriced, they will compete. Okay, let's move over to the condo segment. As mentioned earlier, there were 40 sales here. And there seems to be a bit of life coming back to the condo segment. $358,000 was the low price. That was a condo on Waterloo Ave. And $1,350,000 was the high. That was a condo at 1880 Gordon, which is at Clare and Gordon. As mentioned, $536,000 was the average price here. That is trending right at about the middle point of what we've seen over the past year. We do anticipate, though, as time moves on, that this segment is going to struggle a little bit. It's not going to crash, but I do believe there is some softness coming on prices. I don't mean to be negative on this segment. It's not that I'm trying to be a negative Nancy or Nelly, but that it is supply and demand in action. There is more and more inventory coming to this segment, and the more inventory that comes to this segment, the more that individual condos will be competing with others, potentially in their own building or their own development. And when that happens and buyers have more choice, they tend to be able to negotiate harder, and prices ultimately decline. It's in favor of buyers, which is the type of market we're in for condos. And it's indicative in the sales that we saw in March. Of the 40 units that sold, 0 sold over the asking price, and only 1 of them sold at the asking price. 39 of the 40, or 97.5% of condos that were on the market, sold under the asking. So unless it's a really bizarre scenario where somebody underprices their condo to sell it, we are expecting that buyers in almost every case have the ability to negotiate the most recent price. So if you're out there and you're thinking about buying a condo, whether it's with us or with another realtor, always negotiate on a condo at this time, because there is an imbalance of buyers and sellers, and to the buyer's favor. We are starting to see a little bit of life in that there are more sales happening. So we do have a lot of listings coming to the market. We now have 250, I think it's, I'll get into the specifics in a second, but about 250 condos on the market with just over 1 selling per day. It's 1.3 actually. And late last year, that number was down below 1. So we're starting to see a little bit of life come back to this segment. The other metric we watch for is vacancies. So the number of condos and townhouses on the market that are vacant, as in the owners have either moved out or have decided not to rent it and keep it vacant because they're planning on selling, but are still paying for it on a month-to-month basis. So we do watch that. It's been in the 40% mark for quite a while, but now in the current market, we're sitting at 38%. So that means that they're either taking them off the market and doing something else, or they've sold. And so that number is decreasing. So it's an interesting move we've seen in that more are selling and less are selling vacant. So we'll continue to watch this, but perhaps it's a sign that the condo segment is starting to turn a bit of a corner. And just to clarify, when I say turning a corner, I don't mean that I think prices are rising. I think prices are actually going to be declining slightly over the next little while, but I mean turning a corner in that there's actually starting to be more attention, more buyers showing up, and transaction volume is increasing here. but I don't think it means prices are going up in the condo segment at this point. Okay, so where are we now? Well, the first quarter is now behind us. The March numbers are kind of ugly, and I think this is not just exclusive to Guelph. I think this is across most markets. But the Q1 year-to-date numbers, that's January 1st to March 31st versus the same period last year, we look at three metrics: the number of houses that sold, the dollar volume sold, so that's if you add up all the sale prices together, and the average price. All three of the metrics are down. The number of houses sold is down 15% in the first quarter versus last year. That's 52 less houses have sold. The dollar volume is down 19%, 223 million this year versus 275 over the same period last year. And the average price has declined almost 5%, 4.9% versus 2025. That means the average price so far this year is 743 versus 781 last year. And where do we see this going into the spring? Well, I can tell you that volume is increasing. Although volume is increasing specifically at this point in condos. On the current market, today we are at 464 residential resale homes on the market in Guelph, made up of 207 detached, which is a slight decrease, as I mentioned, versus even 2 weeks ago. So to be moving into the spring and not seeing a lot of movement here in detached is interesting. And we are starting to see a rise in the condos and townhouses. There are 257 of those. That's a 7% increase since just 2 weeks ago. So there are increasing numbers of homes available on the market in Guelph. However, that's at this point coming solely from the condo and townhouse segment. We did just put out a blog and a video on YouTube, on our YouTube channel, about buying first or selling first, which is the most common question we're getting these days. And there really is no right answer to that. It depends on your unique situation and your risk tolerance. If you are very particular about what it is you want to buy, then you may want to buy first. If you are more so concerned about your budget and how much money you have to buy your next house, you may want to sell first in this market. Throughout April, I would expect that we are going to see a rise in inventory. That happens every single year in April versus March. But will it be the same as last year? I don't know. Will prices be coming down slightly over the next little while? I think yes, and I think more so from the condo and townhouse segment. And I do think some segments of detached are going to come down. I think that would be south of Stone Road. But I do think north of Stone Road, we're going to see a little bit of a rise in demand and hopefully more listings to meet that demand. If you find this information valuable, feel free to give us a subscribe on YouTube. Tell a friend about it. Read our blog at bethandryan.ca. And, of course, let us know if you have any questions. Thanks for tuning in.